Hello everybody, welcome to this weekly market analysis webinar from LCG with myself, Jasper Lawler. So the plan for the webinar today is to cover the major currency pairs, indices and commodities that are traded with LCG. If there is any particular question you had on your own trading strategy or on some particular market you'd like me to cover, or just a general comment on the video, that would be it. Leave a comment on the video and we'll get back to you as quickly as we can. Of course, there's also customer services, which is 24/5 at LCG. Let's jump over to the trading platform here. I'll start with the currency market. So here's the thing. Last week we talked about 110.5 as a potential level that the market could roll over from. We were saying that when the market was still sub 111. We've got that push up to 110.5 we were talking about, but there is something of some, the MACD did make a slightly lower low here, but this is it's almost a double bottom in the MACD, whereas it was a lower low in price. So you could argue that bit of bullish divergence going on somewhat in the euro, and the way things are behaving at the moment, with a kind of stuttering around 110.5, it looks like the market could push a little bit higher from here, potentially 111 or 112 being two levels to consider before the market then does turn again to the downside. And the trend is down, so I think that's the way we're viewing things. And at the moment, sticking with that conviction of 110.5, that's what we said last week. Let's not give up on the conviction when the market actually reaches the retracement level we were talking about. So still expecting that drop to 108, but let's see. Market turning a little bit more bullish than I would expect come reaching these levels. So maybe 111, maybe that would be the area that we eventually kind of roll up, maybe a false break above this little high and roll over once we come close to the 20-day moving average. Maybe that's something to look out for here. But still, assuming the trend is lower, fundamentals wise, we have heard more about QE from the ECB. That would be negative for the euro. A reason for the euro to get a little bit more positive in the short term is that there are stronger and stronger voices for German fiscal stimulus, so some spending in Germany, breaking their rule of a balanced budget potentially. Before they were saying just about it would only happen in an economic emergency. Now maybe they've been talking about a shadow budget where they could draw up a budget just in case it's needed to do a bit more spending. So it seems like that would be a positive for the euro, and one reason why we do get up to that 112. But still, net actual printing of euros and debasing the currency from the ECB for me would be a bigger factor, depending on what the Fed does relatively, obviously. So even if we are more bearish in the euro, still potentially a hedge here in terms of our opinion on the pound against the dollar. It seems like we could put in a double bottom here at 120. 120, if we remember, is quite a big level. It's it's basically minus the flash crash. It's pretty much the lows we've been dealing with for a while. And if you look at this action here, big bullish move. We've pulled back down again, but look at if we do put in some kind of fractal low here again at 120, look how much higher we are on MACD versus the last time around. So potential big bottom in plays at 120, getting ahead of ourselves a little bit, but nonetheless, again, big bullish divergence on the daily chart. We've taken out what could be the neckline of this double bottom at 123, and so a projection here would be taking the height of this pattern more conservatively, projecting it from 123, takes us just shy of 126, so somewhere between the round number of 125 and 126, potentially an upside target here that could be reached quite quickly in sterling. Dollar yen, we talked about the break of this trend line. It's happened. We were looking for the break and then the little pullback. and then the move higher. So I think we're in the midst of that move higher now. Also backed up with some positive divergence in MACD. Obviously the lower low here and the higher low here. I think we even talked about that last week. And so then I think logically we probe up to that former resistance level up at 109 from here, from 107 to. Maybe we get a little pull down to the trend line first, to the broken trend line first. But my expectation at the moment is that we hold 106 and that we target 109. But let's see. Dollar CAD, not something I always mention, but that what we had been saying for the last couple of webinars has played out. We didn't get the move to 134, which in the last webinar we started to say might be what's going to happen after we got the break above this resistance area, but it turned out to be a false break. And so our previous call of 133 thereabouts being the top has played out quite nicely. We're sub 132 now. And I think given the kind of longer term nature of this potential reversal we're looking at, look at that big weekly engulfing candle. Engulfs about 4 previous candles. Pretty bearish sign. That's why on the daily chart, I don't think we get much in the way of a pullback. Ideally up to 132. And then from there we target down to 13. And then from there, as we say, we could even end up targeting the next low down, which is 128, if this migrates from an uptrend into a new downtrend. At the moment, it's kind of sideways with a downward tilt. But if we take out 1.3, I think 128 comes into play. Switch gears from currencies to the couple of commodities that we follow. Gold still looking obviously very bullish. But the same thing that we've seen in terms of the other currency pairs having bullish divergence. I think gold actually looking almost the opposite, looking a bit top heavy here. I think we need a bigger pullback to get more interest, potentially down to the old top of the range here at 181. If we say that this, broadly speaking, was the old range. Then maybe we just pull back down to there and rebound from there, 114.50, or maybe 114 is the round number. Sorry, 1,400. Maybe that's the level where we get the next leg up in gold. But it seems to me that a pullback's in order. I said that last week, and we're getting the makings of it now with a move below 115.50. If 115. I keep saying 115, but 1,500. Once we get the close through there, I think that's what opens up the floodgates to the biggest shift down to 14.50 or to 14. Brent crude. So I have to say that last week, what we were looking for last week is we basically had this little range in play here. And I basically was saying, okay, logically you expect the trend to continue. For the this downtrend line to be to carry on. So we were looking for a close down here for a little rebound and then a follow through lower. But actually, what we got was a false break. And so anyone who just traded the pure candlestick pattern at the support, we were in a short-term range-bound scenario, and obviously with the benefit of hindsight, that little false breakout resulted in the next couple of days push straight up to the top of the range again. So it would have been a nice trade. Those trying to play the same thing on the other end, it's not working out so far. In fact, if you've got your stops above this high, they're getting close to getting taken out here. So it looks to me like you should have had, if this was a decent bearish signal, you would have expected some immediate follow through down to the bottom of the range and lower. We didn't get that. This little candle to me is pretty bullish up into that long-term declining trend line. I think we get a break of that trend line, and I think we get a push up to 67. That makes sense in the context of the US and China having further trade talks in October. And so that trade war risk slightly off the table for now. and so that's generally a good thing for oil and expected oil demand. Let's shift gears to indices. So I have been thinking that maybe we'll get a push up to 7,500, but you've got to watch the price action in front of you and look at the way we've failed at 7,300, not only for these last 5 days, but obviously these 4-ish days over here as well. So 7,300 proving very stubborn. I think once we get above there, we make short order of 7,500, but at the moment we're getting a break through the bottom of this range. If we look at it on a more short-term basis, look at this as our trading range, assuming this is our support. Now if we get the close lower on a daily basis, any push back up there into this area, which is more specifically, if I actually draw something in there, it's 20, pretty much 7,240, I would say is pretty much the kind of level we're watching here. 50 you could say is the rounder of the numbers involved. Yeah, a little push up into that area. I think we probably then, that would be your opportunity to expect a drop down to this key, if you remember, level. It looks better on the daily chart. Let's zoom out. Key level down here, it's basically 7,000. 7,000, the big one. And if and when we finally take out 7,000 again, I think that that really should open the floodgates, because that's held as support on multiple occasions now. Germany, we're looking good again. It's those same things we were talking about before in terms of the macro picture. Talking about fiscal stimulus in Germany, that's good for German stocks, particularly given the fact that the DAX is made up of big, heavy industrial companies who would be the main likely beneficiaries of any government spending program. So, in that environment, bit of speculation on German government spending. Put your money in German shares, you will get that money. Makes a lot of sense. And also, if you put together that with expectations of lower interest rates and quantitative easing in the Eurozone, then European assets move up when the government or central banks are buying them. So two very positive factors for the DAX here. Nonetheless, I sort of feel like we're due another drop in equities. So maybe the 12,300 level and the 76.4 Fibo, the confluence of those and this rising trend line, maybe how we drop again in the DAX. But as I said, it's more like you want a failure at the level, because momentum is obviously pretty strong at the moment. And finally, this is Wall Street. Again, couldn't get through 25,300, broke out the top side of the range here, little false break, but finally we got it. I thought what we were saying last week is we thought this would probably get taken out, but we're looking at the longer term level here, and maybe that's where the failure happens, and it still could. But I think probably the round number that everyone's really watching is 27,000. If we get an intraday push above 27,000 and the market closes down below it again, to me that would be an interesting sign that the conviction isn't quite there in this rally, and that might be what we need to get the market to suddenly drop down again. But obviously, if we close above 2,700, you've always got to look at the alternative. Then it seems very likely that we're pushing up into new record highs. And if we do have a weekly close, for example, above 27,400, which is that old record high, that's when we're really looking at this scenario where actually we've taken out the overhead supply and we're opening up the next leg higher in a bull market. So despite all the negativity out there, we're not far off record highs. So while I think that we're probably due another failure at 27,000, I'm certainly open to the idea that we break out into a new bull market. So let's see. Interesting times. Right, we'll leave it there for today. Thank you very much for watching. Jasper signing out.